Welcome to the Daily Brief, where I'll go over the action in the market for Monday, November 28th, and then we'll see how things look for Tuesday, November 29th. And we had quite a down day. We were down over 1.5%. Our charts are still remaining positive for the most part, but we are showing some weakness. We're still seeing below average volume, so that could be taken as somewhat positive to have a pretty strong down day on below average volume. But all of last week, we were well below average and we maintained a fairly positive stance. We've been able to work off a lot, not everything, but a lot of the short-term overbought condition. We're not overbought in the intermediate term, and we're still negative in the long term. So let's go back and look at what happened. Right at the open, we had a gap lower open. The futures were negative pretty much all night, and then they just picked up steam after the market opened on Monday. We had a gap lower below S2, and these pivot levels were you're going to see a lot of numbers that we usually don't see, and pivot levels that we hit that I don't even calculate. That's because Friday's session was so muted. It was closed early on Friday. We barely moved. We were a little bit up, a little bit down. And the next trading session, that's where the new pivot levels are used. And we hit a lot of these levels and even went to what might be S5 or S6, but I don't know how to calculate those. So we opened below S2 at 3014. Prices kept falling below S3 at 4,000. That's kind of a critical level, especially psychologically. And we even fell below S4 at 3987. As the day went on, prices kept falling and falling. We ended up hitting a low at about 3956. We closed a little bit off of that, but we ended up being down 1.54% on below average volume. It increased over what we have been seeing in the holiday week last week, but it's still below average overall. The technicals, they're still hanging in there positive, but with the down day, we're showing some weakness. Inflation and interest rates, that's the big concern right now. And we're going to be getting a lot of economic data this week, and we have the employment situation report coming out on Friday. And so that could really have an influence on things. A lot of geopolitical concerns, especially some new ones coming out of China. Well, not necessarily new, but they're hitting the news more than what they've been hitting. And I'll talk about that in just a moment. And then we had some Fed speak that we dealt with in Monday's session, which was not taken as positive. We also have Chairperson Powell, who will be giving a speech on Wednesday, and the market's going to be hanging on his every word when he does that. And when he speaks, that's the important one to listen to. Here's the chart showing how we gapped lower even below S2. We quickly went down below S3, stayed up above S4 for a little while, but then ended up breaking down below that. And like I said, I don't have S5 or S6, so I don't know if we hit any of these levels. That's just because of the real muted action that we saw in Friday's session. And then we closed a little bit up off of the low. So what are some comments that we can make? As I just said, Chairperson Powell will be giving a speech on Wednesday. And then China, they're having a lot of social unrest right now. Now, the official line that I'm seeing in the news is that it's because of the zero COVID policy. But there's more to it than that. And this is a lot bigger than what's going on. So we'll have to see if those things start to develop. But the reason why I even bring that up is there's a lot of companies, specifically Apple. They're really getting hit hard right now because of the unrest that we're seeing in China, and all the other companies that do business in China. That could affect their earnings, and it could also affect the supply chain. So we just want to be aware of that. Now, there's another thing that I'll bring up at the end, again, is that there's a looming railroad strike that could be happening in December. And now we'll have to see. Can they come up with some kind of a deal before the deadline? Will there be an 11th hour agreement? But you think about the lockdowns that they're having in China, those products get shipped to America, And if the railroads are not working, and if we're having diesel shortages, which we've heard a little bit about, what's that going to do to the U.S. economy? And what's that going to do to stock prices? So just not a doom and gloomer, not saying that these things will happen, but they're in the works right now, and it could lead to something like that unless we are able to get ahead of these things and come up with some kind of a solution, especially a solution that the stock market likes. The dollar was up in Monday's session. Interest rates rose slightly. Mainly what I mean by this is it's the 10-year that I follow the most, and it was up a little bit. And then we had some Fed speak. We had the Fed president from New York, who was a voter, said inflation is too high. Okay. Well, the market really didn't like that one very much. And then St. Louis Fed President Byrd, who we seem to hear from quite a bit, who's also a voter, indicated that the Fed may be more aggressive and they may continue with their rate hikes into 2023. The market's been building in this scenario that at December's meeting, they might only raise it by 0.5% instead of 0.75%. And then that possibly could be it. Not saying that that's what will happen, but that's kind of the scenario that the markets have been dealing with or creating. But we've been dealing with scenarios all year in 2022, only to have them dashed at some point. So what is Chairperson Powell going to say on Wednesday? What are they going to do at the next meeting? Is it going to feed into this idea that inflation is starting to come down, and so interest rates can not go up as much or possibly stay the same or go down? Or are they going to come in and rain on the parade again and say, no, inflation is so out of control? And then the market doesn't like that, similar to what happened last summer with the Jackson Hole speech. So just be aware of these things looming in the background. On a short-term basis, we only have a few of our stochastic studies. The short-term stochastic, it's no longer overbought, but the intermediate and long-term, that is still extreme positive. But remember, I take that whole chart, the short, intermediate, and long-term, and I treat them all together as a short-term indicator because they're pretty touchy and they move pretty quickly. Intermediate term, we still have the BPI is extreme positive, but this could actually be positive. To be down 1.5%, over 1.5% in Monday's session, and the BPI ticked up just a little bit, and it's still positive. Now, these are price levels that we were at not very long ago, and the BPI is looking for new price movement, but the fact that this momentum is still holding up, that could be seen as positive. We still have all of our yield curves that we follow that are inverted. Sentiment, it ticked down with the down day, but we're still positive. We're not back into the neutral area yet. So overall, the market is still looking somewhat positive on a sentiment basis. We didn't have any economic reports. And our trend, it's positive, but with the down day, the ADX turned back down and is showing a little bit of weakness. It's still slightly above the moving average. So you could say it's strengthening with some short-term weakness there. And I switched our bias now with the down day to negative, and I've kept our momentum at mixed just because a lot of our charts are still hanging in there. Our oscillators are still positive. A lot of our other indicators showed some weakness, but they're still positive overall. And the idea that we've been wanting to work off this short-term overbought condition, well, a lot of that happened in Monday's session. Now we're going to be looking to see if we see more selling, what's the intensity of that selling going to be? Is it going to damage our technical picture that so far is staying more on the positive side? Just to remind folks, because again, I have new folks watching the video all the time, this is comparing the price action of 2006 through 2008. That's the green line with what we've been seeing. This is not updated. I haven't been able to update this since November 17th, but this suggests if we follow this same basic pattern that we might see some weakness going into the end of the year. Now, we could break away from that and buck this trend, but at the same time, we just want to be aware of this. The same thing is true here with the VIX, where this is also a chart that hasn't been updated for a while. but we've been following a basic pattern with the VIX, and then with a 12-day shift, it shows where the VIX really goes up, and that goes up when stocks go down. So there's a couple of historical models or charts that we look at just to get an idea of comparing what has already happened with what is happening now. And a lot of folks really like to do that. I think it's useful. I think it's interesting, but I don't rely on it all that much. It's just part of the overall picture that I personally use. One thing in Monday's session is we probably overdid it with the advanced decline line. We went extreme negative in one session. So we may have gone down pretty far, pretty fast as far as the advanced decline line ratio is concerned. So that may help keep things from continuing to decline. Here's our ADX showing how it has turned down. It's really hard to see, but we're slightly above the moving average. The green line, although it has declined, is still on top. So we still have a positive trend currently. The VIX, I just wanted to show this because it's no longer oversold. The VIX bounced up enough in Monday's session so that we were able to work off some of this VIX 9-period RSI. Here's our daily chart, how we never did make it up to the 200-day moving average. Are we going to be able to recover from this initial fall that we're seeing on the chart, go back up and at least test the 200-day moving average? We were above this pivot level after Friday's session, and that was seen as positive, but we broke down below that in Monday's session. And then down at the bottom, we see where volume did pick up, but it's still below this moving average that I plot here. Here's our moving average tree where we came up to the 200-day exponential moving average and have now been falling back down. We'll want to see, can we go up to this 200-day simple moving average? New highs, new lows. We saw some weakness here, but a few more new highs than new lows, but we're starting to roll over a little bit with our 5-period, although it's still positive, and we're flat over here with our 10-day differential. I wanted to bring this up because based on price, we're still looking okay, but the summation index based on volume has now turned down again. Sometimes this is a leading indicator for us. In our fib levels, how we were just slightly above the 61.8% retracement, well, we broke down below that now. So this level, and it wasn't very far from support, so I'm not sure if you could really call that much support. We were just a few points above this red line, but now we've broken back down. If we continue to fall, will we fall down to the 50% retracement that's charted here, or can we get some buying power coming back in and take us back above the 61.8% level? Here's a longer term look also where we broke down below. We were slightly above this blue line here, but now we've broken back down below that. And this is one thing that's positive. Even with the down day, we're down 1.5% on below average volume. But you see where the 10-day average of the highs and the lows, they continue to advance. They were actually up slightly in Monday's session. This is a slower indicator. But if you look at the times when we were extreme negative, a lot of times that gave some real support to the S&P 500. This is still looking viable right now. Our other setups, our sector rotation, they're just showing some weakness. But this is a little bit slower and is right now anyway showing that internally the market is still holding up. That and the BPI still being pretty positive. Another thing I wanted to talk about quickly here is the World Bond Index, where we had come down and broke through the COVID low. And then we started to recover. Well, now what had been support is now acting as resistance. And we came right up to this level and we're now coming back down slightly. So we want to keep an eye on bond prices. Okay, so what are we looking for Tuesday? The technicals are positive, but with the down day, they're weakening. We're still somewhat short-term overbought with those couple of indicators, the stochastics mainly. I'm looking at the BPI as more positive because it's not breaking down on a down day, at least yet. Fed Chair Powell, he'll be giving a speech on Wednesday, so be aware of that. We have some economic reports coming out on Tuesday. The housing price index, we have the Case-Shiller home price index, getting a lot of housing data. Consumer confidence is also coming out. And then all the geopolitical events, Russia, Ukraine. The thing that's kind of at the front right now in China are with the protests. And is that going to lead to more social unrest? Is that going to have an impact on not only US companies, but the supply chain? The market is still really fixated on the inflation and interest rates, and we may get some more Fed speak in Tuesday's session, but we'll be waiting for some Fed speak from Chairperson Powell on Wednesday. And then at the bottom, the looming railroad strike. Now, there's still some time for that to be resolved, and a lot of times they carry it out to the very end, and everybody's all, and it becomes headline news almost, and everybody gets all emotional about it and fixated on it. We'll have to see, is that going to happen again this time? But they have not reached some kind of a deal, at least yet. And so that's kind of looking a little apprehensive, at least going in the short term in the next few weeks. So our scenarios, not going with the down scenario, but the technicals are still positive, and that's why I'm not going with the down scenario, but they did show some weakness on below average volume. We're still having a little bit of short-term overbought conditions. Still going with the up. Now, if we have more down days like we had in Monday's session, we're going to switch over either to neutral or to even a declining more of a look. But as long as the ADX is still slightly above 20, we're saying that they're still positive with our technicals, but they are weakening on below average volume and still a little bit short-term overbought. Our scenarios, the shorter term scenarios based on the 50 period moving averages, those, yeah, they showed some weakness. A lot of our ratios showed some weakness, but longer term, we're still holding in there. And that's why I wanted to bring up that one chart of the 5 period of the highs and the lows. Our sector rotation, they didn't do as bad in Monday's session as maybe you would think, but they're still just not doing all that well either, as our positive setups. Technicals, they're still positive for the most part. We're still hanging on to those moving averages, but we've lost some fib levels and some pivot levels right now. And we're not going sideways. Now, if we continue to go down, the ADX is probably going to drop below 20 until those two lines, the green line and the red line, they get closer to each other. But right now, it's still above 20, just slightly, but it is showing some weakness, but it's still positive. So what's our conclusion? The S&P is still positive, but showing some weakness, and it's somewhat overbought. Intermediate term, it's positive. And when, at least the charts that I look at, they're not really registering an overbought condition right now, but it is showing some weakness with the down day. Long term, we continue to be negative. So thank you. Have a wonderful Tuesday. I'm still looking at possibly just doing the daily brief videos for the time being. I hope you find these useful. And just as soon as I can, I'll get back into doing the more full length or deep dive type of videos where I actually look at charts that don't necessarily change as much. So have a great day, and I'll talk to you in the next video.